Welcome to the Trading Lounge and the Day Ahead Report. And we've got PMI figures coming out of China today at 12:45, so they're going to be a bit of a game changer at that time. There's also the ADP figures that are out tonight in the US, and they will be the lead into the Friday's non-farm payrolls. And we've got the US elections on Tuesday. If Romney looks like getting in, then he'll be stopping the printing press, so to speak, so that won't be healthy for the markets, and we'll see a move to the downside, but that's a little bit of a guessing game there on that one. And we've got the RBA rates on the Tuesday, so we'll see the Australian dollar being run up to that, so buy the rumour, sell the fact. As you can see here, the Dow Jones, the US markets started trading, so the support level of 13,000 is still in play. We were looking for a bounce off 13,000 back up to the 13,200. That's been in play now. We're seeing a move down through here. Our job really is to work out if there's more to this bounce or it's completed at this stage. Some markets would suggest that it's completed and we'll be seeing new lows from this point. There's in simple with the Dow Jones here, the move down through here can be counted as wave 1 coming down through here, and a wave 2 here, and a wave 3 coming down through here, and a wave 4 coming back to the 13,200, and then a move down through here. Obviously there's going to be support and so forth through here as well. So, we're not going to see any sort of sort of really strong moves to the downside. But look, Wednesday is a day that in the weekly bullish cycle that would give us a high, and Thursday is the bear day, and that's what we're facing today. So we're still net short in the market. We'll stay on that side and perhaps even look to add to that. So looking at this a little bit sort of closer in here on the Dow Jones is a bit of an example for the other markets. So we were counting this down here just before. It's down for wave 1 and back for wave 2 here and down for wave 3 here, but we also need to count it. We need to have both counts in mind all the time until we can eliminate them. So we can also count this down for an A and a B and a C wave coming down through to here as well. So on this bounce here that we've got off 13,000 here, we were looking yesterday at this being 5 waves up through here, and that's correct, and this is pulled back down roughly the 61.8 retracement level as it should do. It does appear to be impulse wave down through here, so we should see 5 waves down through here, 3 waves back up, and then another 5 to the downside at minimum here. There's also the case that this little wave 4 here can be placed over here as such, and this wave 5 here over to here. And the reason for doing this is that this would look more like the A wave to here, a B wave to here, and a C wave to here, because the C wave's always got 5 waves in it as well. So an A and a B and a C wave to here. So this could also be the start, not just an A wave coming down as a B and a C here and then further up, but also down for 1 and back for 2 here, and then down here further for a wave 3 to come down. Because yesterday we were counting this from this low here, this bounce, this up for 1 and back for 2, and then 5 waves up to here, and for 3, then 4, then 5 up to here. And you can see that this is a really sort of sharp impulse wave to the downside. So so it's giving us a direction. So if we've got 5 down here, we'll be looking at a 3-wave counter trend, and then further down. So if this low here gets taken out, then the 13,055 roughly, then it's going to be bearish from that side there. So as I just mentioned before, we were looking at a possible, from here, an A wave to here, a B wave from here, actually an A and a B and a C wave to here for the B wave, and the C wave up to here. So look, very shortly this is going to work itself out through here. But see, when I look at the European market on roughly the hourly chart here, the pattern down here, as you can see, is more like an ABC pattern in terms of an A wave, a B wave, and yesterday we were, or over the last few days, we've been looking at the 1, the 2, the 3, the 4, and the 5 for the C wave. And you can see how far this has come down. So this is a very clear A, B, and C wave here for a corrective wave. And you know, that should produce new lows here. Sure, there'll be 5 waves down here somewhere that may not be finished, and then a 3-wave counter trend back into 58 here, and then further downside. So that 5772 there is going to be quite significant in due course. So look, this pattern here is kind of clearer in an ABC pattern. So and that's why I'm sort of looking at the Dow Jones in that light as well. Even the Australian market's got much the same pattern as the FTSE just had then. This is the hour chart too, a bit squashed up here, but this A, B, and C here is very much like the FTSE that we just had a look at then. The A, the B, and the C. This is just a bit more spread out. So going back to the Australian market, you can see the A, the B, and the C here. Also, we didn't get support on the top of Group 1, the 45.30, so it's got that bearish connotation there as well now. Also, too, this particular pattern through here is very similar to this pattern in here, and this one as well. And as you can see, that's moving down through here, even though the trends are not getting larger to the downside as such, but the corrections are getting larger to the downside here. So it is type of, you know, it is expanding in its own way in a direction, and that's to the downside. So this is it's a corrective pattern through here at this stage. Sure, I could be wrong, and it could be up for 1, back for 2 of 1 degree, and then the next smaller degree up for 1 and back for 2 here, and then moving up through there. So given a little bit of time, there'll be, if that's moved down here in 5 waves through here, then there'll be some sort of, you know, retracement back up through here and then down through here. So look, in half a session or so, we should see that a support or resistance through here. And as I mentioned, the PMI figures coming out today at just after 12:30 will have some sort of impact on this market as well. So also with this here, the subgroup 2, the 44.72 here is also a serious player within this as well. So we've always known that there's been a fair bit of support here because of over here, but you know, this pattern here is suggesting that this could be tested again. If that's the case, then we'll see a further break to the downside here. Okay, so let's have a look at commodities that have been reasonably steady overnight. Okay, the pattern that we've just been looking at with the FTSE and the Australian market as being a corrective pattern, that's pretty much the same for all the commodities actually. So this is an 8-hour chart here, so it's a bit of a squashed up picture, but it's good to have another sort of bigger look at it. But yeah, well, look, we see this as being a corrective pattern up through here. It's copper, and obviously base metals would be influenced by all of this, and resources, materials, and whatnot. So we see this is a corrective move up here. So yes, this may only be one leg of the corrective move, so we may see like an A and a B and a C, and spending a bit more time here as such, but it's corrective, and there will be new lows made in due course. Gold's pretty much the same, so this is a 15-minute chart here, if I can just sort of find here. So this is the same thing here as well. We're considering this bounce here in gold. Oh, it's on the daily. We're also considering this as corrective as well. If it found support on top of the 1730, the top group 1, well, then we'll be forced to be into a bullish pattern there. But it's sure, it can trade above that, but it would need to find support on that. The 38.2 retracement level comes in around the 1727, which is close to the 1730 there. So, but the pattern there, just find it. Okay, here's a bit better here. Yeah, look, it's basically the A wave, a B wave, and a C wave up through here. I don't know if this is actually finished just yet. I think this is still the one in the C wave here of 4, and it's a bit hard to read. I'm on the laptop, but up for 1, back for 2, up for 3, back for 4, and up for 5. So I still see there's possible another little push up through here, up into the 1727, 1730 sort of area, or the wave 4 of 1 lesser degree into here, and then we should see that roll over through there as well. That would be the same as silver as well, the same sort of pattern here. We know that the silver, this move down through here, we know that this is corrected because of the overlapping wave structures here. We're just looking um, for this to complete itself. So from this low here, we'll be looking at up for 1, back for 2, up for 3, back for 4, and up for 5 through here. And that would be sort of completion of that. And oil's the same as well. It's been a bit of a struggle, the oil one. We've just reworked the wave count a little bit further here as well. So from this low here, we're still looking at this as well, into slightly different. We were looking at it as an ABC. We knew it's corrective, and we were looking at it as a ABC, then a triangle, but we're back to the ABC in a bigger picture now. And that's the problem with corrections; they can just continue to double in size, and it's just hard to know, because some markets need to wait for other markets to fall into place and so forth. But look, pretty much the same sort of pattern on a 20-minute chart here. So we've got the A, the B, and the C wave here. We feel that that could actually be complete here now as well. So we'll see if that works lower through here. So 86 as resistance might be a nice sort of setup through here. But all the commodities are basically in the same pattern, and they're very similar to stock as well, even though that stock hasn't been trading as much because of the time off from the New York situation. But yeah, they're all sort of looking at each other and got the same sort of pattern there as well. Let's have a look at let's just have a look at Brent 1 here as well. Yeah, so this is if I don't know if you follow Brent at all. Just sometimes looking at different markets can help in different ways of confirming things. So anyway, the 1080 here as resistance would be there, but same thing as well. This would be the A, the B, and the C wave up through to here. So any breaking lower, or the 1080 as the resistance would be there as well. Let's have a look at the US dollar and the Australian dollar and the. Okay, starting with the US dollar here. As you know, we've been looking at this as a wave 4, but it also can be counted differently as well, in terms of an A wave here and a B wave here and a C wave down through here. Not that it makes any difference. The main point is that this particular correction here is a correction, and yeah. So just in working that in a smaller view here, we're looking at this in terms of an A wave, 3 waves for a B wave, and a C wave up through here. This could be actually completed now. Let's just have a look at that and this particular top through here. But the main point is here is in terms of, I mean, Elliott's one thing. Elliott's terrific for the direction, but the levels are handy to see if the price, the market's accepting the level or the price as a support or resistance. And as you can see at the moment, it really hasn't rejected the price yet, so it's still going through the acceptance of it. Yeah, so bear that in mind. This topping section here, don't worry about all this labeling here just for a second, but for the people that understand Elliott, is that this high point here, we've got 5 waves down here. That's quite clear, isn't it? So that's like an impulse wave. So that could be wave 1 to the downside here, or it could be a C wave to the downside. So just exploring here, just putting that there. So this move down through here is a corrective move. So this can actually be an A wave. This can actually be a B wave in 3 waves. It can take out the top here. That's fine. So an A and a B and a C wave here. So that actually may be a large ABC correction here. And if support is found on here and starts to move up through here, then we'll have a very strong move to the upside in the US dollar, and we'll see strong moves to the downside in the indices and commodities and so forth. So and currency. So we just need to sort of bear that in mind. So I just want to get, I just want to get through this point here before we, before we sort of call it in, because as I mentioned before, the 80 here hasn't become the support or the resistance at this stage here. The price is still working through, but don't get bored with it, because when you fall asleep during a correction, then they tend to move off. So what we need to do now, we need to work out if this is an A and a B and a C wave here, and we're going to start getting, a stronger move to the upside through here. And if that's the case, then we'll be able to pick it up, through here. If this was a move to the downside and we had 5 waves to the downside here, which is quite clear, then we would be looking for a 3-wave counter move to the upside. So it would be like an A, we'd have like a B wave here, and then we'll have a C wave in 5 waves coming up through here somewhere to the 61.8% retracement level of this through here. And if that's the case, then we would see a move back to the downside through here. And it would be at this stage here that it would find this 80 as resistance here. And then we can look to go short from here through to here. But if we start getting a move up through here that starts to look like a 5-wave structure through here, then then we've got a different different move altogether then from here. And this is what it would sort of look like through here. So it's going to become clear very shortly what we've actually got through here. So we've either got this 5-wave structure building through here, or we've got an A and a B and a C moving through here, and then a rolling over from here. So very shortly we're going to know what's going to be going on here, and then we'll see the 80 become accepted or rejected. And this is the same, of course, for the euro as well. So when we're looking for the same thing occurring here, we're looking at this whole pattern here. As a possible wave 4 here, but as I mentioned yesterday, just because we've got the A here and the B here and the C and the D and the E here as a possible triangle through here, we also need to be mindful that it could be down for wave 1 here, an A and a B and a C, back for wave 2 here, then down for 1 and back for 2 and so forth, and moving lower from that point there. So we need to keep that in mind as well. We don't want to we don't want to sell ourselves on a particular thing without, while there's evidence of something else being in play as well. But either way, this is, it's not the time to fall asleep here at this, because all trends come from corrections, and that's what we're sort of working through now. So we're still involved in the Elliott wave guessing game at this stage, but it is getting to the point where it will become clear, and when that happens, then we've got ourselves a trend. So it's worth tossing a few ideas around and looking at all the different sides of it. But at the end of the day, it will be support or resistance, and we'll move off from that point there. So yeah, so just looking at this in more of an intraday level through here as well. This is the pattern that we're looking at through here. The possible A, B, C here, then the D and the E, and then support on the 130 here, and that move up through here. It's a little bit like the indices. That could be the low here, where we've got an A and a B and a C wave in 5 waves here, and that's the end of it there, and we'll work lower through here. Or we can take the bottom here and look at this as 5 waves up through here, and a 3-wave counter trend here, and then a move to the upside here as well. So it's still got time to sort of play out through here. So the 5 waves here are quite easy to see on this 5-minute chart here. So we've got it's just like a bit like the indices. We've either got an A wave here, a B wave here, and then a C wave coming up through to here to complete that correction here. And that could be the case because we've got that sharp move down through here. The 5 waves would be up for 1, back for 2, 3rd wave, the 4th wave, and the 5th wave up through here. And if we're looking at a retest of the 130, as you know. So this move down here is really quite sort of sharp. So there's probably a bit more to this to the downside, but this will see a retest coming back up through here. So if this moves down through here as a 5-wave structure through here, and then gets back above here and fails in a retest up through here somewhere, and then works back down through here, then you want to be looking for a short position through here, but using the 129.72 there. In the same sort of case as we've got here as well, because it's come down through here, moved through it, and retested its resistance here, and now it's out of, it's rejecting group 2 here now, isn't it? So it's likely to retest lower through here as well. The Australian dollar is going to be affected by the PMI figures coming out today, of course, and also the RBA rates being announced on next Tuesday as well, seeing a run up for that. But as long as the price is above the within group 2 here, there's 65.72 and the 80 within here, then that's the 50 here, of course the midpoint, but as long as the price is in, while the price is in the group 2 here, the 65, 72 and 80, then it's positive, and we can look for further upside there. So as always, you want to be on the right side of the 72. Yes, you may have some small losses, but if you stick with that as the basic plan, being on the right side of 72 all the time, then you'll be on the right side of the market. So can we drill in there a little bit further through here? Yeah, look, this is like 5 waves up through here. So this move coming down from the reaction from the 104 here is in 5 waves. So you can see the 1, the 2, 3, the 4, and the 5 here. So we're seeing a retest back up to supply of 61.8% or whatever. So there's going to be some movement around here. So you just give it time through here, and perhaps after 12 o'clock today, after the PMI figures, then you take a position in the market based on being on the right side of 72. All right, look, as I mentioned yesterday, we're in Adelaide at the moment. Had a nice meeting, enjoyable time at the ATAA meeting last night, and we're off to Perth and for my sister's wedding. So there will be no report tomorrow, because Perth is quite a few hours behind Sydney, and as much as I love you, I don't want to be getting up at 1 o'clock. After 3 is fine, but 1 o'clock in the morning's a bit much. And also I don't want to fall asleep at my sister's wedding as well. That won't be a good look. So yes, but we'll be updating the Australian trades. The Australian robo trades is the main thing. So that will be done, and of course the Elliott for the Forex will be done as well. So it'll just be that report tomorrow, the day ahead report tomorrow. Alrighty, well, good morning and good luck.